Alright, check it. What's going on, kings and queens? Hopefully, you all are having a blessed, and beautiful, and amazing day. And in this video, I was just looking at gold, and gold was consolidating. So I'm like, why not make a video on how I personally trade during consolidations? Because everybody has their own way of doing things. And personally, I just want to share how I personally do things and just share some tips that I've learned along the years, right? So, and for me is identifying the trend. What is the overall trend that price is in a consolidation range? So let me show you like a quick example, just drawing it up, right? So let's say the overall trend is bullish. Boom, boom, boom. And then price starts consolidating in a bullish trend. Let's say something like this, right? Boom, boom, boom. Price is consolidating in a bullish trend. How I personally would do this is I will only be looking for buys at the support since price is bullish. And if it was vice versa, I'll do the exact opposite. So let's say price is bearish, right? Boom, 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 boom. And then it starts consolidating here in this bearish trend, right? I would only be looking for sells at the resistance, because one thing that I've learned is a lot of times when price is trending, it'll consolidate and then it'll create like a higher low in the middle. So something like this, right? So let me move this up. Actually, let me just add this. So one thing I've learned is price will do this, boom, it'll create like a higher low, and then it will continue the overall trend. So that is one thing to keep in mind. And for me, understanding market structure is key as well, because seeing this trend right here, all of these higher lows that are formed, none of these are completely valid until price were to break above here and continue to keep trading above here. Once this happened, then that higher low was formed. So that means price could have did it all they wanted to do in this range here, but essentially until price were to break below here, this overall trend is still bullish. So I'll still be longer term looking for buys. So that's personally what I like to do when it comes to trading consolidation. I like to just go along with the trend, and that's the main thing that I do. I like, there would be times where, and what I've learned personally, when I tried to like take sales going against it, I've noticed that I had a higher probability of winning when I was going along with the trend versus trying to just take buys and sells at the support, buys and sells at the support. So that is a little gem for you guys, and that's how personally I do things. So I'm going to show you guys what it looks like on an actual live charts. So for example, we can look at gold right now and we see the overall trend on gold is bullish, like clear as day is bullish, especially what's going on with the US and everything. So we see the overall trend is bullish. We have this higher low, price comes up, boom, higher high, higher low. So I know the overall trend is bullish. So all I'm simply going to do is identify the key area of support and the key area of resistance that price is trading within this consolidation range. And as I can see, there's a key one. Let's mark it up right here. And I'm going to show you guys why I have it marked up. These two, I'm going to mark these two up, and I'm going to show you why I have it like this. And I'm going to mark this one up, right? So this is the range that price is trading in. And as you can see, when it comes to support resistance, let me show you guys another gem, right? When it comes to support resistance, there are three things that price does. Price can either come to a support, let's just say resistance, right? Price can either come to this resistance and touch it and bounce off of it. Price can either come up to it again and, let's say, gap it, so price doesn't get all the way up to here, it gets a little bit short, and then it comes down. That still shows that that area of support resistance is valid and it holds. And price can also break above and then come back below, and this is called a overlap. All right, so if we look at this example on gold, as we can see, look at how price broke above and it broke right back below. This is an overlap. You can see price came up here, it touched it right here. Price came up here and it touched it and rejected. Price came down here. What did it do to the support? It overlapped it. It broke below, and then it broke right back above, touched it here. Let's say price were to essentially reject this area and come down from right here. This would be classified as a gap. So now that I have that marked off, this is when it becomes very, very, very simple, guys. All I'm simply doing is just going down to the lower time frames, like the 15-minute, 5-minute, whichever time frame gives me the entry. I'm not on that whole like you have to use the 30-minute, 15-minute, 5-minute, 1 minute. Every single time frame can be used. That's why this is a completely different video, because this isn't the topic, but that's why time frame correlation is very, very key, because certain candles have to form before the main candles form. Like Two 15-minute candle has to form before a specific 30-minute candle has to form, and more and more and more. So I can like make a specific video just on that. And I'm just talking about trading with consolidation and showing you how simple it is. I'm going to show you these examples, right? So at this point in time, we wouldn't have known that this was in consolidation. This was obviously trending. So this is when we start seeing prices consolidating in this range. So look at this, right? Price comes down into support, it rejects it here, and if we go to the 5-minute time frame, I'll mark this off to see if we can actually get a better entry. And all I simply do, because with me and my strategy, the three things that I need every single time I enter a trade: price to be in a trend. So we got the trend is bullish, that's number one. Number two is price has to be trading at a key area, which we got the support, resistance. And then three, a candlestick entry, which in this case, since price is bullish, I'm going to be looking for price to be trading bullish at an area of support and a bullish candlestick for me to enter. As simple as that. Once I get that, I enter the trade. So if we go down to the 5-minute time frame, let's see if there's an entry on this 5-minute time frame for us. Okay, so cool, boom. Look, as we can see here, price came down into this area, rejected it, and what do we have? A hammer. So we have a hammer in this uptrend at an area of support. Enter the trade. And when I enter the trade, I put my stop loss below the range that it's in, and then I will put my TP at the next resistance range, so it'll be up here. And as you can see, look what happened. Price came up, and once again, this is another video. This is not the topic, but like your trade management is depending on you and how you see the market and X, Y, and Z. Trade management is out of the, like, we're not talking about that. We're just talking about the initial entry and how to trade during consolidation. And I trade to this next area of resistance, and as you can see, look what happened. Price gapped it, and then it came back down. Let me go back to the 15-minute time frame so I can do a little bit more examples, a lot easier and quicker for you guys. Boom, look what happens. Price comes down into support again, and look what we have, this morning star pattern. Entry once again here. Boom, same exact stop loss essentially right here. And then I'm looking to target this resistance range once again. And as you can see, price comes up into this resistance range. As you can see, boom, price comes up, comes down, creates a higher low. And this is when like scaling in comes into play. That's once again a completely different video, completely different topic. I want to just focus on this consolidation, the whole initial entry, right? Price comes down, rejects it, boom, entry, get out the trade here. Price comes back down into this area, you have another morning star pattern, another bullish variation. Boom, price came down here and it gapped this area of support. Boom, entry again here, same exact TP, looking to target up into the resistance range, and look what happens, it gets there again. That is 3 setups. Price comes back down here, and this is where the overlap comes into play. Let me scale out a little bit so you guys can see a little bit what I'm talking about. But price comes down, it breaks below, it breaks back above, and I personally, this is me personally, because even this is like a gym when it comes to like you back testing and studying your strategy. Actually be real with yourself on where you would have entered, not like, oh, I would have entered once. No, be 100%, 110%. And me personally, I know what an overlap is. So price broke below, it overlapped. I personally would have been looking for entries right here. So let me go down to the 5-minute time frame. Beautiful, 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 beautiful. Because I've noticed a lot of times when price overlaps it, it'll break above, come back down, reject that area, and then continue to take off. So personally for me, I would have entered here in this area. Price rejected it. I would have, this is a doji rejection at a key area of support. I would enter here personally. And what I would do is put my stop loss below this, put my stop loss below here, and then I'm going to look to target the resistance range. And as you can see, look what happened. Price came down. Yes, you would have been in drawdown for a little bit. There is this thing called drawdown, and it's okay to be in drawdown. That's why I say, like, when you back test and with your strategy, you got to keep it 100. You can't like back test your strategy and to the point where it's like you're never in drawdown. Because if you do that, what is going to happen? You are going to be in drawdown at one point in time. And if you don't know how to manage your trade, if you don't trust your strategy in X, Y, and Z, you're going to see that drawdown. You're immediately going to get out of the trade and thinking that you're wrong. But that's not the case, right? So as you can see, price came down. Would have been in drawdown for a little bit, but look what happened. Price still came back up to this resistance once again. And look what happened. Price came back down into here. Look what happened. Price came up. Boom, boom. This double bottom and form right here. You got this essentially close to the tweezer bottom, but this hammer. Boom, entry right here. Boom, stop loss. Can either go below here for way below here, or just put it below here. below this area, below this wick, and then guess what happens? You target the exact same, and this is the live market right now. You target the exact same resistance, and look what happened. Price came up here and it gapped it a little bit. And this is the very, 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 very simple way on how I personally trade during consolidation. If we go back and just look at all these setups that we could have caught in, 1, 2, and let's just look at the days, right? This was Wednesday, November 19th, all the way to Monday, 24th. Literally, buys, and look at, like, well, this is gold, so gold is like the pip count is a little bit different, but look at all of these trades that you could have caught in this consolidation range versus being like, oh, I would just wait until price breaks out of it. This is a lot of profit, a lot of profit to be made. And that's literally, you can apply this to any single pair, any single, if price is bullish, look for the buys. If price is bearish, do the exact opposite. But I just wanted to kind of share this video with you guys, and I hope this video does help you all. Let me know what other topics that you want me to go a little bit more in depth with when it comes to my strategy, just breaking down the strategy. But overall recap, like quick summary of it, to be able to trade in the consolidation, what I do is I go along with the trend, whatever the trend is. If price is bullish, I'm going to only look for buys at areas of support. If price is bearish, I'm only going to look for sells at areas of resistance. And all I simply do is wait until price gets to one of those levels, regardless if it's a bullet, whatever, if it's bullish or bearish. And then once I get my bullish or bearish candlestick pattern, depending on the trend, into the trade, and I target the next resistance. And I simply just let the market do its thing. And once it gets to those resistance ranges, get out the trade. Because if price breaks above, you can easily just get back in later on, instead of assuming. And this is another gem, this is a very, 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 very key when it comes to like the mindset of it. You can't have greed when it comes to, like, you shouldn't have greed anyway, but having greed can really, this could hurt you a lot more when you try to trade in ranges, because you could potentially see something like this, right? You see this bullish candle that breaks above, and you assume that price is going to continue to break above, so you're like, all right, cool, price about to break above, I'm about to step away, or whatever the case may be, and then price comes right back below. You forget there's a thing called an overlap. Price overlaps, it comes right back below and comes all the way back down, and you would have lost all this profit. Same thing here, price could have broke above, you assume that price is going to keep going up, and it comes right back down in 2 candlesticks. Boom. Same exact thing for like here, assuming that price is going to come up here and the price comes down. So that is one thing to always keep in mind. And how I personally do it, I always have multiple positions. So once price gets to that area, let's say price gets here, let's say I had 2 positions, no, let's say I had 3 positions, I would close 2 positions here and then just move my other one, my stop loss, in profit, in case price does create that higher low and continue to keep going above. But if price does come down and stop that one out, I would at least secure 2 positions and had the other one stopped out in profit. So hopefully this video did help you guys. Love you all so much. Hope you all have a blessed, beautiful, and amazing day. Make sure to like, comment, and subscribe, and I will catch you all in the next one.